What exactly is price rotation? So yesterday I talked to you about the opportunity trading the currency cross, euro versus New Zealand dollar. I've been talking about this cross since March 30th this year. It's already summer, almost the end of the summer 2019, and I'm still talking about it. Why? Well, this is the perfect video for you to discover the why, the how, and especially what this concept of price rotation will do for your trading. Welcome everyone. Again, my name is Jose Ricardo Tejaen. I'm the coach, what I call it that, coach of the War Room. And we use different strategies to trade. So today's video is going to explain to you exactly what happened yesterday, or actually what is been happening since March, and how understanding price rotation will help you to apply to different asset classes so you can improve your bottom line, which is actually make money in financial markets. The picture you see in front of you, it's the Cathedral Cove in New Zealand, which is part of a marine reserve in the southern part of Mercury Bay. And the reason why I show you this is because I truly believe that trading must be entertaining in a way that keeps you coming. So I like to share a lot of vivid images and share with you. So it has to do a lot with the euro, it has to do with the New Zealand dollar conditions, but overall it's about price rotation. Okay? Now, before I continue, please remember that past performance does not constitute present or future performance. At the same time, all the videos that you see are for educational purposes only. I'm not a financial advisor. I used to be a registered stockbroker. I'm not anymore. So what I'm sharing with you is my trading experience as a senior analyst. I'm sort of working with different strategies and how I squeeze them and make sure I understand the risk when you apply them. Of course, remember there's a risk in trading and investing. So always do that with money you can afford to lose. That is called risk capital and is a part of your savings. Are you ready? I am. All right, let's begin. So I'm going to go directly to see how it looks so far. Yesterday I was explaining to everyone that what basically happened here is that I'm sharing the idea of the analysis, and I register this information before it goes out to our live and paid subscribers. What that does is basically giving you gives me an opportunity to share. Of course, they already took home more than 450 pips because we were also trading the pound, the Great British Pound, against the New Zealand dollar. So listen, this is the most important. Sharing is truly caring. So if you pay attention to this video, you will learn exactly how I do it, and you can ask any questions. Just make sure you leave your questions or comments in the description in this video in YouTube. All right, now let's take a look. So far we are up, let's see if I can update this, we're up 58%. So hypothetically, if you were to allocate $10,000 yesterday, you will be already 5,000 and a change up from your initial risk capital. Now in addition, we are at 27.82% up open. Now if you look at it is right now, we are all together, this is 440, that's 560 pips in the profit, in the money. Just see if I can have the pencil. Right now with this open, you will be 520 pips. The reason why at this point I'm mentioning pips is because I know that a lot of our paid subscribers, they don't just go with one standard or two standard lots. They go with 10 standard lots. My job is to facilitate the information in order for you to position in the currencies that are set to provide you the best return for your risk capital. That's the most important I do. My job is to measure risk, which I did as I explained why we use the stop loss 169.20. If you want to go over that, at the end of this video I will have part 1, part 2, and this will be part 3. I will come in the next 4 weeks with part 4 and final part for this trade during 2019 that has been absolutely one of the best trades. This is the reason why this video is called Forget About US Pairs. Everyone is so into trading the euro or the dollar versus the Japanese yen, where the money in 2019 has been focused on currency crosses. All right, now, So 520 pips. Also, it's true that some of you message us to our email and we're saying like, okay, I waited and I got a better pricing. That's great for you. I'm super satisfied, I'm glad all the blessings that you guys got at a better entry. All these entries got better, had better positions during the EC, the European Central Bank conference press conference. And that is about. I do the analysis, I share all the details, and then you can execute as you see fit. That's the most important. Now, let's continue. The price rotation is a very simple concept. What is price rotation? Price rotation. Rotation as a concept has been around. It's easy. They have been using this in equities for a while. But when I started studying price rotation, is because from all the different strategies I know, I was looking one that would allow me to have less stress in front of the computer, less suffering I don't have to worry about because I will use a pretty decent stop loss, and 3, it will require less maintenance. Listen, it's great if you want to be a trader, but how long it took you to be a professional? Call it like you're an architect, an engineer. Don't you love what you do? Is that really necessary that you transform yourself into a trader? That's what is the War Room about, where I explain the price rotation concept. This is not just about you becoming a trader. It's about maximizing your risk capital, how you decide what service, what strategy, what particular strategy you're going to follow. And that's what I do with price rotation. I apply price rotation from whatever you can imagine. Call options, put options, the S&P 500, the DAX, which is the German equity index. I can trade the CAC 40, which is the French equity exchange. The FTSE 100. I can trade soybeans, corn, wheat. I can trade currencies. I can apply this concept in everything. So that particular benefit was very appealing to me. I can trade different asset classes. So that's what I use it. On top of that, I mix it with Japanese candlesticks. There are a lot of things. But this helps me to look for those massive profits that actually have the power to change your life for good, for positive. You can pay your mortgage, you can pay your college kids. That's what I'm looking for. A merely 10%, with all due respect to hedge fund managers or other mutual fund managers in the US or Canada, it doesn't do any good for your life. If you have a couple $1,000,000, maybe. But the reality is that not everyone is there, okay? Now, when it comes to price rotation, I never get tired of explaining the following. I look for levels that I can see on the chart, particular levels. And I look for a mix of historical levels of relevance. For example, one level here, I'm looking at the monthly chart. Take a look at this. You see this level? This is... the low was 168.81. Now, I can take this level and I can use this as my level of relevance. But the most important at the end of the day, if I look at the monthly, I look at the low of the month that also was an option, 170. That 170 had the opportunity to be your stop loss as well. But you can see how this 69, you have this 69, but here let me look at this, the 168.80. I marked the 169.20 because back all the way to July 2011, let me share with you. There you go. January 2011, the low is 169.26. That's almost 8 years of information. Think about it, 8 years. You can also use this one, and then you have all the way back to 2005, that's 14 years. So we know that, and I knew based on price rotation, that 169.20 to 168.80 was the key, or is the key level as support in the price rotation. The price has been rotating in a very specific level. Now, let me show you this. Let me just remove this, okay? And the next level I've been working with is this one. And now, if you take it from this key level, mid-level, we have almost 3,000 pips to the upside, and we have the same, almost 3,000 pips to the downside. So this is the massive range and price rotation for this currency cross. Now, slowly, as you can see, there is a bullish trend. Now, because we didn't close and open below this area, the 169.20, the 168.80, now I know that price is set to rotate higher. This will include an opportunity to go all the way up to 199. That means almost 2 to 1 the euro versus the New Zealand dollar. That means that the kiwi, the New Zealand dollar, is going down. And then the flow, the interest of investor goes directly to the euro. And that's the opportunity you want to take, because historically speaking, once we're in this level, look at what happened 14 years ago. This is a one in a lifetime opportunity. Here we have the same. So every time that we have this sort of level, this is a level, historical level, that matters and allows the price to rotate within these ranges. Range number 1, 169.20, 168.80, and all the way to this level, the 199, to the 2 to 1 exchange rate. And that's what we want to look. Now, the most important is, at the end of the day, is our risk. Now, as I explained on part 2, there are two options. The option I offered yesterday, which is already in place, 169.20, but you also had the chance to use the low of the month. The low of September is 170. So right now, if you were to go long this trade, you will have 374 pips of risk. Now, rest assured, remember that in crosses can make a pullback. If you're going long, expect a pullback. That pullback can be as deep as 400 pips and will not affect the trend that you're trading. In this case, if you're trading the bullish trend, this pullback can be go as low as minus 400 pips. Keep that in mind. That's very important. Our first resistance will be this one. That's our key level. Where is that key level? Let's take a look. That key level will be at 179.20. So we have previous highs at least level, the 175.70 and 176.10, and the second level of target within this positive rotation, bullish rotation, will be the 179. From this level, it can easily drop, as you can see, as I mentioned, 400 pips, 450. It can go back all the way to 174.60, and it will still be in a bullish trend. The only way that you may need to consider that is not going to work anymore if it has an open and close below the 173. This is why you have to see that I'm still looking for these different levels to the upside. Now, one thing I'm going to share with you is the fact that a lot of traders, a lot of investors, they sort of want to do what is called the cost average. Cost average. So it means that if you buy an asset here and it drops, you add more. Now the question, what about actually putting more money on your champions, on positions that are in the money and are following the analysis that you agree? Does that make sense? Of course it makes sense. So what I did here is that I added on the winning position. So I'm going to take out these two. I already made more money. That's the idea. And I'm going to keep these two run its way. I'm still up 440 pips. Plus, you already have almost $7,000. The idea before was to make it in eight weeks. As you can see, that was just the time frame. Right now, based on price rotation, we're already up almost $8,000. You will be up more than $8,000, and you still have a lot to go in this trade. Now, let me go back to explain a little bit more the price rotation. Now, at the same time, if I were to define other levels, I'm just going to remove these big levels, which is almost 3,000 pips to the upside, 3,000 pips to the downside. You can also define more tight levels. For example, I can come at this level and establish a new range, and this is also valid. But here is the trick. Once it starts trading above the new high, it will open the door to retest the specific levels that we had before. And you can see how the price behaved at these levels. It had the opportunity to break and continue. And also, although you think that this time will be, once again, another resistance, the odds in this case favor the euro. We have discussed this on part 2. Remember, when we look at currencies, we also have to take a look at what is happening in the futures market. In the futures markets, we had a little bit of a leading signal, leading indicator, when the number of short contracts increased just before the ECB, European Central Bank, announcement, the press conference that we had yesterday. So what that means is that the opportunity is here to squeeze those that are short and continue to new highs. This is very important to understand. And this is exactly what I do apply on every single currencies. Price rotation. Now, of course, we cannot deny the fact that this price can come here and rotate lower. That will require the euro to weaken more against the New Zealand dollar. But one key aspect to remember, the kiwi, the New Zealand dollar, is not a risk currency. It means that if investors need to buy a currency, they will take first the euro and then the New Zealand dollar. It has to do a lot with liquidity and the number of countries, for example, where you can use the euro. You have the European Union, the EU, European Union. That means that there is a number of countries where you can negotiate with, you can do transactions. But on the other hand, New Zealand is a very limited space. It's a very limited territory where investors only have an opportunity to do business with a fixed amount of people. So you have to also look in the perspective of the fundamentals and how that looks into what currency at the end of the day you want to have. Okay? Now, to finish, because I won't extend too much on price rotation for this particular trade, as you see, there's potentially, I mentioned that I will discuss today exactly what happened. The reverse is in place. This is a potential and very powerful bullish reversal, and we're looking at least to 179.69, which is the higher part of the price rotation for this currency. After that, an open and close, sorry, in this case, apologies, it will be close and open above 179.69. We'll be targeting 184 based on price rotation. And as you can see, one more time, don't forget, there is a bullish trend in this case. One more analysis I want to let you have. I'm going to take this go with the triangle formation, and I'm going to take this section. The books, they call for different number of dovishs, but there's one important thing to understand. Not all these chartist figures are perfect, but what it does tell is that once, I'm going to take this one, once we break to the upside, this is all the upside potential that we have. And once again, there's nothing else that we apply here that, again, price rotation. Once prices allocate their values above the 179.69, all doors are open to go all the way to $2.07 against the euro against the New Zealand dollar. So I want to invite you to subscribe to our channel. There's a lot of information. You have Ross Mullins, Ross Gibbons. You also have our CEO, Dustin Pass, teaching you about the Insider Report. But one of the most powerful strategies to learn in 2019, price rotation. This is part 3 of forgetting about the US dollar, US pairs, and trading currency crosses. In the next couple weeks, about 4 to 8 weeks, I will come back with the final part 4, and discuss exactly what was the end, the bottom line financial outcome for this trade, and also the success that our paid subscribers had. Okay? Thank you for watching, guys, and I'll see you on the next video.